Hi, this is Zak Mir with the Great Request Show here at Zak's Traders Cafe for Saturday, the 7th of June. Starting off with Amaroq, where we're still recovering from the rug being pulled at the end of March. Difficult to see exactly why there would be such a rug pull, given that that rug pull coincided with the company hailing a sharp increase in the Greatland resort estimate, but as I've said before, it sort of looks as though it's a bit of a better to travel than arrive kind of situation, and perhaps the market is just waiting for actual production to arrive rather than all the positive flags that have been waved in the recent past. In terms of the charting, we've got the glass half full rather than half empty, RSI above 50, the share price above the rising 200-day moving average, and it looks as though the 50-day line is just ready to curl up as well, so that would mean perhaps that from as soon as next week we're in the run up to a golden cross. That could be delivered by the end of this month, and hopefully that will coincide, or that could be the signal that we're heading for a break of that red resistance line there from March around 91 pence, and heading back to break the rather difficult £1 level. Hopefully the turnaround through £1.11 sometime during June, and best case would be maybe £1.30 by the end of next month, but still quite a lot of work to do, and not quite out of the woods until we break that March line. Moving on to first class metals, which has had to take quite a few unnecessary kicks and punches over the recent past, but the shares rallied hard at the end of last month, and recently found support at the 200-day moving average around 1.9 pence. Above that, we're looking for a retest of our previous 2.8 pence target, which was exceeded temporarily at the turn of the month, and then maybe up to as high as 4 pence by the end of next month, while we're above that 200-day line. The hope here is that the 200-day line will start curling up, as the 50-day line already is doing, and then we would get a repeat of the sharp rally from 1 to 3.4 pence that we had last month. Another point to note is the RSI is at 57, so right in the box seat in terms of turning around in a positive way from that 200-day line base. Finishing off with a company which has transformed itself over the past 6 months and also transformed its share price. Looking at a company with nearly £2 billion market cap, rising trend channel there from back in October, and recent support at the 50-day moving average of the floor of that channel. The floor of the channel currently at 13 pence, and above that we're looking for the top of the channel, rather logically as high as 19 pence, which could be delivered perhaps as soon as the end of next month. So seeming set fair there, with a gradual glide for the shares through to new highs, or new near-term highs. Could argue that there's a line of resistance there at 15 pence if you're cautious. Maybe wait for an end of day close through 15 before assuming 19 is on its way.